It's 9:47 p.m. on a Thursday, and a single video is about to redirect the entire trajectory of your financial life. You weren't looking for it. You were just scrolling. Then the thumbnail hit. Someone your age, a wristwatch that costs more than a semester of college, talking about currency pairs and passive income and a lifestyle that looks nothing like your Monday morning. You don't understand most of the terminology, but you feel something ignite. By midnight, you've got a demo account open. The platform looks like mission control. Charts stacked on charts, numbers cascading in real time, red candles and green candles breathing like a living organism. You press buy on EURUSD just to feel what it's like. 4 minutes later, you're up $9. It's not real money, but your palms are sweating anyway. The thought arrives fully formed. People are commuting to jobs right now that don't have to exist. That thought is going to cost you more than you know. The next 3 weeks dissolve into obsession. Fibonacci retracements, Bollinger Bands, candlestick patterns with names like ancient battle formations. You find a strategy on a trading forum, backtested. The post claims to a 91% win rate. You screenshot it. You memorize it. You wire $500 into a live account and feel the shift in your own identity. This isn't a hobby anymore. You are a trader now. Your first live position is GBP USD. The setup matches the screenshot perfectly. You click buy. The candle turns red within seconds. You hold because the guru said patience is everything. 27 minutes later, you exit, down $95, hands shaking slightly. The market just delivered your first real lesson. It has never seen your screenshot and doesn't care. Level 2, the deep end. You've burned through more than half your deposit and arrived at the logical conclusion that the solution is more information. Another book, a $79 course with a money-back guarantee you'll never actually use, a YouTube channel from a British guy with a Range Rover who keeps saying, trust the process. You're not being reckless. You're being thorough. There's a difference, or so you tell yourself. You draft a trading plan in a notes app. Risk parameters, entry rules, the whole structure. For almost a week, you follow it with the commitment of someone training for a marathon. Then a setup appears that isn't in the plan but looks textbook perfect. You rationalize for 40 seconds and then double your normal position size. The trade is gone in 18 minutes. You don't log it. The documentation of your disciplined trades stays pristine. The impulsive ones simply don't exist on paper. This becomes the rhythm: structure, temptation, loss, quiet shame, repeat. You diagnose yourself with a psychology problem. You buy a journal with a leather cover. You try breathing exercises before you open the platform. But the real issue has nothing to do with discipline. You're executing a system with no actual edge. And executing it consistently just means losing consistently at a steadier pace. You join a Telegram group with 3,000 members. Someone in there posts signals with a running tally. You follow him for 2 months before realizing his record is barely better than a coin toss. You've now deposited just over $1,000 in total. You've kept less than half. You tell people you're still in the learning phase. You are, but not in the way you mean. Level 3, the quiet turn. Somewhere around month 9, the hunger for a secret formula just stops. Not dramatically. It doesn't die. It just exhausts itself. You stop downloading PDFs. You stop joining new groups. You sit in front of the charts and do nothing except watch. You start noticing things. Where price moves with purpose and where it hesitates. Which levels seem to matter and which are decoration. You're not reading it yet, but you're beginning to listen. You build a framework so stripped down it almost feels like giving up. 1 pair, 1 session window, 2 entry conditions. That's it. You take it back through years of historical data by hand, scrolling bar by bar, marking every valid setup. The results are not cinematic. A 54% win rate, a 1-to-1.6 reward ratio, no viral moment, no explosion of returns, but it works. You run it live for a month. 12 trades. 10 follow the rules. Those 10 produce a net gain. The 2 that didn't follow the rules, both losers. The math isn't complicated. You leave the signal groups. The constant noise has shifted from useful to corrosive. Your account crosses $2,000 for the first time. You feel something you haven't felt in this entire journey. Not excitement, something quieter. Competence. Level 4, when the numbers get heavy. 6 months of consistency. Not 6 months of winning. Every week, there was a drawdown in month. 4 that made you genuinely question whether you'd constructed a mirage. But the edge held. The system held. You held. You bring total capital to $5,000, and immediately, something changes in your nervous system. A 5% month is now $250, real money. A $150 loss lands differently than it did when it was just a percentage. You feel it physically. But you don't chase it back. You sit with the loss and let the next valid setup come to you. Not revenge trading is the hardest skill you have ever developed. It doesn't feel like a skill. It feels like restraint, like holding your breath. You find a small private forum, maybe 30 people. No one is posting screenshots of wire transfers. People post trade journals, execution notes, questions about whether a specific spread during news releases affected their entries. The conversations are dry and technical, and the most useful thing you've encountered in 2 years of trying. You realize everything from your first year was content, engineered for people, standing at level 1, people, with hope and no evidence. You were the audience. Now you're something else. At month 20, you're running $15,000. A 6% return generates $900. You're doing this from a laptop, at a desk in a spare room, and it no longer feels like performance. It feels like infrastructure. Level 5, the isolation of knowing. You're managing $90,000. A portion of that belongs to 3 people who spent months reviewing your records before transferring anything. You have signed agreements, defined drawdown thresholds, monthly reporting obligations. Your daily life has restructured itself around market hours in ways you didn't fully anticipate. You stopped drinking, not as a resolution, just because the data made it obvious. 2 drinks the night before and your decision-making in the first session is measurably worse. You sleep on a fixed schedule. You exercise not for the aesthetic, but because your error rate on low sleep days is a number you've actually calculated. At dinner parties, someone eventually asks what you do. You try once to explain it. Position sizing, liquidity zones, risk-adjusted returns. You watch their expression change. Now you just say you work in finance and let it sit there. The loneliness of this is something nobody in any YouTube video ever mentioned. The people around you can see the results, but not the interior of the work. You carry the accountability alone. The position that's drawing down at 2 a.m. is yours. The decision about whether to hold or cut is yours. There's no one to consult. In that moment, who will actually understand the variables? You hold 3 years of living expenses in cash, completely separate from trading capital. The market is where you grow. That reserve is where you breathe. Level 6, running the operation. Capital under management has crossed $500,000. You didn't get here from an advertisement or a landing page. You got here because someone who trusted you introduced you to someone who didn't yet, and that person checked your numbers and made a decision. You have a part-time operations person and a compliance binder that has become a serious document. Somewhere around the $200,000 mark, the numbers began to abstract themselves. You stopped feeling positions in dollar terms and started feeling them as percentage exposure. This wasn't a mindset shift. It was a neurological adaptation. If you felt the real weight of $60,000 moving in a single position, you'd freeze. Your social calendar has contracted to almost nothing on weekdays. You're not miserable, but you are permanently partially elsewhere, some thread of attention always trailing. Back to an open position or an upcoming data release. You made this trade knowingly. You'd make it again. Level 7, the architect. There are 9 people whose salaries run through your company now. A senior analyst, 2 junior analysts, a risk officer, a developer who spent 4 months building your execution, infrastructure from scratch, and support staff who handle the parts of the operation that don't require your judgment. Assets under management sit above $5 million. You placed 3 trades last month. The rest were executed by the team inside the rules you built. The first few weeks of stepping back from execution were genuinely difficult in a way you couldn't have predicted. The urge to reach over and override a position your analyst was managing, not because they were wrong, but because your hands wanted to be in it, was physical. You gave it time. You learned that your actual job is no longer trading. It's designing the conditions that allow consistent alpha to exist regardless of which individual is clicking the button. Your investors are small institutions and family offices now. They don't ask about win rates. They ask about drawdown protocols, succession planning, and custody arrangements. You have answers for all of it. Some nights, you open a chart for no reason at all. Not to analyze, just to watch the candles move. To remember what it felt like when it was raw and terrifying, and just you. Then you close the laptop. Level 8, the view from here. It's 2 p.m. on a Tuesday. The office is quiet. Your team runs the floor. Your systems manage the risk. You've had 2 calls this morning, neither of which required a decision from you. You oversee $25 million in client capital. You don't say that figure out loud anymore. It's not a status marker. It's an operational fact. The thing that funds 7 salaries, covers the infrastructure, and justifies the legal and compliance overhead. Your understanding of the market is no longer technical in the way it once was. It's not about pattern recognition or indicator confluence. The market is a continuous, shifting record of collective human behavior, fear and greed, and institutional mandate and algorithmic response, all layered on top of each other in real time. Your edge isn't superior information. It's a calibrated read on where the consensus has drifted far enough from reality to create an opportunity, and the patience to wait for that moment rather than manufacture one. You eat lunch alone most days. The quiet is not loneliness. It's where the clearest thinking happens. There is nothing left to demonstrate. The audited statements exist. The track record is documented. The work speaks in a language that doesn't need volume. You're walking to a meeting when a message comes in from a junior analyst, a question about a textbook setup, framed with the particular confidence of someone who has studied hard and doesn't yet know what they don't know. You read it twice. You remember being that exact person. Same certainty, same invisible blind spot. You write back carefully, not the answer, but the question that will lead him to find the flaw himself. Right now, somewhere, someone just made their first deposit. $500, maybe less. They found a thumbnail, felt the pull, and decided this was going to be different for them. They're wrong about how easy it is, but they're right that it's possible. And the cost of the education ahead of them is already fixed. It's the same tuition everyone pays. They'll pay it, and most of them will walk away. But a small number won't. They never do.